Hey, Warwick.
Hey, Nick, you have an evil grin on your face.
I do. I found some jokes just for you today.
Oh,
You ready?
I don't know if I'm okay with this, but let's go.
Okay. What do you call a cow with two legs?
Nope.
Lean meat. But hang on. Wait. Don't laugh yet. What do you call a cow with no legs?
No.
Ground beef.
Welcome to the Tradies in Business podcast with your hosts Warwick Bidwell and Nicole Cox. Divert your phone and grab a brew as Waz and Nick unpack tips, tales, secrets and stuff-ups from guests both inside and outside your trade, helping educate and inspire you to break the cycle of gut-busting and money stress and create a true trade business.
At least it wasn't taking the mick out of me about mountain bikes or micro spikes or whatever the heck else you like to poke me over. They were actually pretty good.
Thank you.
I'm just disappointed with myself that I can't figure some of those out on my own.
No, well, you're on the spot. So it's a bit hard when you're on the spot. You don't have thinking music.
I like to think that I'm reasonably intelligent, but I just can't figure out most of your jokes. I don't know what that says about me or you, or maybe it's neither. Anyway, we are going to have some intelligent conversation today, Nick.
Yeah.
Because we've brought someone in who's really smart.
Yes, smarter than us. That's a good thing.
Unlike you and I. We're just here for entertainment value, although sometimes I'm not sure we even hit that mark on this show. All right. So we're joined today by Mr. Matt Heighway from Lifetime SMSF. Now, Matt, I want our listeners to take up the challenge to say that fast 3 times. Lifetime.
It's a difficult one to say.
Lifetime SMSF.
well, my first business in self-managed super was called SMSF Outsource Solutions. Now say that one quick.
Oh my gosh!
That is
Try
hard.
doing that with a lisp. Matt, welcome to the podcast.
Thanks for having me.
Pleasure, mate. Pleasure. Now we've had a good chinwag and maybe a tiny little rant amongst the three of us before we hit record today about superannuation and government policy and all sorts of cool stuff.
Yep, and obviously at the time of recording, the budget hit last night and there was nothing, absolutely nothing for us.
Nothing for us.
Nothing for us as business owners, that is for sure. Although I think you got a nice little package of work to do, Matt.
Yeah, you have lots of fees.
You don't want $3 million in super, over $3 million in super anymore, that's for sure. So yeah, we've got some work to do there.
Oh yeah, it's going to be an interesting ride.
Now I'm not sure how many of our listeners have 3 million or more in superannuation. I suspect, like most small business owners, their balance is pretty low compared to perhaps if you were a politician or a public servant. Hello to all of the public servants listening to our podcast. So, Matt, we're not going to talk about that, though. We're going to stay away from controversial budget releases and stuff. And instead, we're going to talk about probably some things that listeners don't know about that they can already do with superannuation and take advantage of some of the provisions that are already in place.
Yep, that's correct. So they most people do know what a self-managed super fund is. They've probably heard that they can manage their own superannuation. But a lot of Australians don't understand what's involved and they tend to stay away from it, mainly because the marketing on TV isn't around self-managed super, it's around industry funds and retail funds, mainly industry funds. So self-managed super is, for your audience, particularly around tradespeople, there's a lot of opportunities for them to take advantage of their superannuation, particularly, I think a lot of small businesses potentially may have started out as a sole trader or in a partnership. And in those circumstances, they probably didn't pay themselves super at all because there's no requirement. So you're not an employer. So if you're a tradie starting out your business as a sole trader, your first 4 or 5 years, you may not have seen any superannuation go into your super. So you may have a particularly small balance. And I think, a lot of Australians think that the self-managed super fund's not for them, or they can't get access because, ASIC spent a lot of time over the last 10 years telling us that you need at least, $500,000 in your super to have one, and it's not correct. They actually have come out recently and they've reduced that down to a smaller number, but with access to borrowing inside self-managed super, which I'll get to shortly, you can actually set your own SMSF up with as little as 90, 100 grand. So it is possible.
Nice.
Well, I feel excited now. I've got next to no super, like every self-employed person I know.
Yeah, I've been in business for long enough to have no super as well. So,
well, look, the changes up until 12 months ago, you're only allowed to have 4 members in the self-managed super fund. You can have 6 members in there now too. So we are seeing the popularity wasn't as much as I thought it would be, but we are seeing a lot of, say, builder brothers. A lot of your tradie businesses are family-run businesses, and it'll generally be a couple of brothers or sisters running their businesses. They're pooling their super. So, if you've got 90 grand in your super and your brother and his wife have got a couple of 100,000, you can pool them together and do things with it. We aren't seeing as much. There's obviously a lot of risk involved in respect to that. You'd want to get on pretty well with your family.
Does anybody get on with their family? That's a bit of a loaded question talking to you, mate. But
don't work with your family, but probably don't call your super either. But there is opportunity. But look, in terms of self-managed super, it's not your only option. And I will throw this disclaimer out there that you do have other options. You've got industry funds and retail funds, and for many Australians, that's enough. But with your self-managed super, there's the opportunity to do things you can't do inside an industry fund or a retail fund, and the biggest one is to be able to buy direct property.
Now, Matt, at this point, I'm going to jump in, and this is the financial planner in me, and I've had the fear of ASIC struck into my heart over the years. Just for our listeners, this is general advice, so please don't take what we're talking about today as something that you can go out and do categorically. If you want to take action on any of the topics that we talk about or any of the suggested strategies that Matt brings up, do go and seek professional advice. And I'm going to get Matt to give us a long list of his credentials as justification for why you should listen to him today. But we are just talking general advice here, listeners.
Yeah, so I'm a chartered accountant, and the way the industry is set up is that I don't have a license to provide financial advice. You need to speak to a licensed advisor if you want to get advice on where you should put your super. That doesn't necessarily mean you have to do that. The problem we've got in the industry at the moment is that to be able to go and speak to a licensed advisor, you need 20 grand to get started. So there's plenty of information out there to help you make the decision to set up a self-managed super fund. And if you do come to that conclusion, you can go to your accountant and they can set the thing up for you. So you don't necessarily need to get the financial advice. You should, because what a financial advisor does, it looks at your whole circumstances, and that's why it costs 20 grand to get done.
Now, Matt, you mentioned you're a chartered accountant, which is way more snobby than a CPA.
I'm actually both. I'm
double. Okay.
I'm both. I'm a CPA. I did all my training through CPA, but I'm also a CA because our business is a chartered accounting firm.
Yeah, right. I was unable to stomach the idea of the study and the money involved back in my younger days to become a CA or a CPA, and I decided to become a building rep instead.
Yeah. It's not cheap to keep both of them, that's for sure.
Yeah. Now, how long have you been in the industry, Matt?
I've been working with self-managed super funds for 26 years. So I've come out of uni, and I started out as in business advisory. And quickly moved into self-managed super, and I've stayed there. I started a SMSF audit business from the front of the house with about 40 SMSFs, and it got to around about 8,500. Eventually sold to Deloitte, and then I moved and worked with a couple of SMSF providers in software and actuarial, and worked for Challenger for a while. But once my restraint of trade is lifted, I've managed to come back into SMSF, and now I own my own firm again.
You just can't stay away, Matt.
With a view to do the same. So the plan is to grow it as quick as we can and retire.
Oh, the R word, my favourite word. That is what we're talking about, though, isn't it?
Exactly. So
Yeah.
The ironic double entendre there. But
what I will say to anyone looking at self-managed super is that your general accountant doesn't necessarily have the expertise to manage one. So I've been working predominantly with SMSFs all my life, and my whole team has as well. Anyone that we employ generally comes from our industry. It's a specialised accounting service. So if you're looking to set up a fund or get one managed, then reach out to a specialist.
Yeah,
I think it's a really important point. I've had these conversations with several accountants, because not only do I have my own fantastic accountant, we talk to lots of accountants here at Tradies and Business, and many of them are almost a little lost or perplexed. Now, I'm not saying that they don't understand, of course, but it's not their area of specialty, so they can't necessarily answer the direct questions that I might like to have answered. So like any other area of your life, it's important to work with specialists in the field, particularly one as important as this. This has the opportunity to really set you up. And so finding the right people to get that advice from is essential.
Yeah, that's right. We do work with a lot of accounts. There are a lot of accounts that acknowledge that SMSF is not their specialty. So I do manage clients with other general accountants where he or she will take care of the business side of things, and I'll just manage their SMSF. We work well together. That works really well.
Great idea. Matt, I'm going to ask some real layman's terms questions, because I feel like I can come in at this angle where everyone's listening and trying to scratch their head and figure it out. Is this hard? Because to me, it feels really challenging. Is it hard?
No, it's complex, but that's not for you to worry about. So the complexity really is in the compliance. So provided that you don't just go into self-managed super funds with a view to receive an annual statement every quarter, there is obligations and responsibilities. So a self-managed super fund is a trust, no different than your sort of discretionary trust, whereas a trustee manages the assets on behalf of the beneficiaries. With a self-managed super fund, it doesn't have beneficiaries, it has members. So a trustee, and that will be you in some capacity most of the time. There's another alternative called an APRA fund, where it's similar to a self-managed super fund, but there are professional trustees that manage the fund on your behalf. The problem with that is there will be some restrictions as to what you can and can't do. As opposed to an SMSF. But so you will essentially be the trustee of your SMSF, which means we recommend that be done via a company. So you would set up a company, you be director of the company. We'd set up a self-managed super fund, which is the trust underneath, which we do all the accounting work through, which essentially holds all the assets, shares, properties, and stuff like that. So the establishment process is fairly onerous in respect to what you need to do. You're basically dealing with ASIC, you're dealing with the ATO, and you're dealing with lawyers. So the process, if you find yourself a good specialist, then for you it's nothing. The process is just signing some documents and understanding what your responsibilities are.
Matt, what are the benefits of having a self-managed super fund, or the potential benefits? Maybe we should talk more generally.
Well, if you're asking me, I think it's a good way of showing interest in your superannuation. From my perspective, look, depending on who you ask, what part of this industry you ask, whether it's the government, the tax office, you'll get a different answer. Obviously, industry funds want all their money in there. But self-managed super, there's a few aspects, a few things you can do that you can't do within those funds, and that's buy direct property. You can hold gold. God help us, you can buy crypto as well. But
let's not go down that rabbit hole, mate.
No, we'll leave that alone. It's very popular at the moment for new funds to set up and buy crypto. But look, there's lots of benefits in respect to being able to take control. So rather than just ticking a box that says I'm a balanced investor, you can actually take full control and get engaged with your super. And like it's like anything, you can, if within a self-managed super fund, there's costs involved in running it. There's accounting fees. There's your time. But that gives you the opportunity to really get into your super and making sure that when you do retire, that it's enough for you to live off. Well, so, it's just about engagement, I think.
Matt, as well as purchasing property or the option there, Can we utilize our self-managed super to do the traditional things, so invest in shares, etc.? Is that
Yes,
still
absolutely.
an option?
Yep, absolutely. You can shares, managed funds, anything that you can invest in. Look, there are some restrictions. The restrictions are more around related, ensuring that everything's at arm's length. So whilst you can invest in shares, listed and unlisted shares as well, you can invest in all that. There's rules around sort of making sure that everything's at arm's length. You can't acquire unlisted investments from yourself. You can only acquire listed because it's a way for we can make sure that the pricing of the transfer is correct because it's listed. Whereas unlisted, it's a little bit more complicated.
It was something that I used to talk to clients about back in the days when I was a financial planner. Is trying to get them to understand that it's not technically their money, because people would want to draw it out and use it to, I don't know, put some cash flow into their working capital into their business. It's like, well, that's investing in my own business. Like, it's kind of not your money, because it's preferential money.
Look, there's a lot of misconceptions around superannuation, particularly self-managed super, is that you can run a business through it, and technically you can, but the way that the legislation is set up, it is very, very onerous and difficult to do so. Now, when you get a self-managed super fund, it's governed by what we call the Superannuation Act, SIS. The main part of the legislation is called the sole purpose test, which means that you need your superannuation is for the sole purpose of retirement. So that's how all catch all in regards to superannuation. As soon as you're doing anything that you're getting benefit from now, it's in breach of Section 62, which means that and little things like residential property. A lot of people think they can get a holiday house up in Byron Bay and go and stay in it three weeks a year to clean it, but you can't. It's little things like that. You can buy cars in your self-managed super fund. A lot of people buy vintage cars, and I'll tell you a funny story about sole purpose test. When I was an auditor, we were doing the audit on a fund that had a car that was supposed to be sitting in a storage unit now at Lisero on the Central Coast, and he'd sent all his receipts in. This is probably back in the day before we could scan an email. He was sending boxes of stuff in for us, and one of the things he sent in was a speeding fine on the M4.
No.
And he was desperate to claim the deduction. He said, "Look, I've got this. Can I claim this?" And I said, "Well," I said, "Firstly, you can't claim it, but that's not your biggest problem, because there's a picture of you driving driving the car and
driving the investment along the highway."
That's right. So really, in terms of self-managed super, one of the biggest things that people need to understand is that it's for retirement. So, and even buying a property, if the ATO at any point in time can see that your intention to invest in that property was to move into it at some point in time, even after you retire, then they might suggest that that's a breach of the sole purpose test as well. So it's very onerous. So each year your financial accounts need to be audited by an independent auditor, and they're the gatekeepers in terms of what you can and can't do.
Matt, I've got so many questions.
No, go for it.
I'll stick to the simple ones first. So I assume then, does that mean if I purchase a commercial property as a builder, I can't then rent the property from my super fund? Absolutely,
you can. So a super fund can invest in residential, commercial, industrial. They can buy a farm. There's options there in terms of what type of property they can buy. Mm-hmm. The only property they can't rent to themselves is residential. So to be able to buy a property inside your super fund and have your business be the tenant, mm-hmm. It has to be business, what we call business real property. Mm-hmm. So the definition of that does not include residential. So you can't sort of buy a house in your super fund and rent it to your mum. That's a breach. But you can buy an industrial unit or a commercial property, and you can, provided everything's at arm's length, mm-hmm. you can lease that property to your business. Christy and I, my wife and I, in our super fund, we bought a commercial property probably about 5 or 6 years ago, obviously with the intention to rent it to our business, and then, COVID hit and we didn't. But you can do that. So what you need to show the auditor at the end of the year is that you get an appraisal on rent. So the rent needs to be paid at market value. The property needs to be revalued each year at market value, and you need to be making those rental payments as if it was rented to an unrelated party.
Love that. One of the other questions I had were about the fees. So you mentioned that there is a cost involved, including your time. Is that cost able to come out of your super balance, or does it need to be paid?
No, that's paid by the super funds. That's right.
Got it.
So generally, and pricing it varies depending on who you're using, which the irony is that I'm a specialist SMSF accounting firm, and we charge around $3,000 a year for everything. That includes your audit, whereas your accountant will probably hit you for $5,000 or $6,000 and not be a specialist. So shop around, absolutely shop around if you're looking for value in terms of setting up and running your fund. But it can come out of your fund,
Right.
Hey, Tradies in Business, was here. Sorry to interrupt your listening pleasure. I'm joined by Coxie, of course.
Hello.
You may not know this, tradie or tradie wife or whoever you are listening to this program, but we're business coaches. Oh my gosh, that feels weird to say. But we do actually work with people just like you to solve a bunch of problems. And we have this fantastic program called the Tradiepreneur Program, and that's how we do it. And we do it with a wonderful community of trade business owners who are all trying to fix or improve or change things to progress. Things like getting behind on quoting, Coxie.
Feeling overwhelmed, behind on your invoicing, feeling really stressed or frustrated about the money stuff. Sometimes you can pay the bills, sometimes you can't. What about staff? Oh my goodness.
Oh my gosh, staff.
Trying to get them to do what you want them to do, if you can even find them in the first place. There's so many struggles.
And we've seen clients tackle these things in their trade businesses in quite a short space of time, to be honest, during the program, and recruit staff at a time where everybody was saying you can't get good staff, improve their quality from their team, collect their debts much more quickly. We have sessions.
Getting tips?
Yes. Getting tips, yes. So people rounding up, customers rounding up the invoice by hundreds of dollars because they're so happy with the sales process and the experience of dealing with the trade business owner and their team. So some amazing stories from our clients. But, as they say in the commercials, don't take it from us. Hear what some of our clients have to say.
Coming into Christmas, we are not worried about money. We've got enough money in the bank to pay everybody's leave. There's work booked in for the new year. And for the first time in a long time, we'll be having 3 weeks off and not worrying about the business. That's probably the biggest win of all.
Using the cash flow forecast, I've been able to look into the future and see where I'm going to be situated financially. And it's actually started to have a huge bearing on whether or not I make purchases.
By far, one of the best things about working with Nick and Woz are the other businesses that are working alongside them. It is amazing how empowering it is to be working alongside like-minded people who have similar goals, similar troubles. We can all relate to each other, and everybody helps everybody out by figuring out problems with you that they may have faced previously. Everybody has solutions and constructive feedback, and it's an incredibly friendly, warm, welcoming environment, not threatening at all.
From every job, I know that I will get a sustainable wage that's industry leading. I can have at least 10 to 20% profit, and I can pay taxes, super, all of that, and I do not have to question whether or not I can because of the way that it's been built, and that is thanks to Tradies in Business and what they've taught me and what I've learned.
So there you go. There's some real people. We did not pay them to say those things. And I think that sounds a lot better than Coxie and I reading them out. we really would love for you to check out more about how you could take your trade business to where you would like it to be. Surely you have a vision of what things could be like or what you wish they were like on a day-to-day basis, whether that is reducing stress or actually making more money. Maybe it's spending more time with the family, taking more holidays, having the choice that you really wanted when you started your business instead of this beast that seems to be there for many of you listening to this program. So if you want to find out more about how we do this through the Tradiepreneur program, Coxie's going to tell you all about it.
I'm actually not. I'm going to be really secretive and keep all of our magic up our sleeves. What I would like you to do, though, is head on over to tradiesandbusiness.com.au and you can learn all about us, why we do what we do, and how you can work with us, what that actually looks like. There's a whole bunch of free stuff there for you to download, lots of options. We've always got new stuff going up onto the website and a great place for you to learn a whole bunch more about how you can work with us. You can even book a 15-minute chat.
For free.
For free.
That's how abundant we are. So head over to the website, check it out, book a chat with us, and we'd love to find out if you'd be a great fit for the Tradiepreneur community and start hanging out with some of those people that you just heard from. We talked about, a little tongue-in-cheek, and sadly so, that many small business owners don't have much in their superannuation funds. For many people listening to this, they're probably thinking, well, I don't have, $750,000 to buy commercial premises out of my super fund. What about someone who has a smaller balance? Normally we'd go and borrow money. Is that feasible within self-managed super?
Well, a number of years ago, the section, I'm talking too technical here, but section 67 of the Act says that an SMSF can't borrow only in certain circumstances. And legislation appeared in SMSF a few years back. They added one of the circumstances to be what's called a limited recourse borrowing arrangement, which means that if you've got 100, 200 grand in cash sitting in your fund, you can go to a mortgage broker, and there's quite a few that do it. The banks have pulled out of this recently, but you can go to a broker, and there's some places that will do borrowing inside your SMSF. Now, it's reasonably complex. You need to set up a whole new structure called a bare trust. So the super fund, whilst the legislation says the super fund can borrow, the super fund itself can't actually borrow. You have to set up a structure called a bare trust, which essentially holds the property on behalf of the super fund whilst it has a borrowing in place. And as soon as the borrowing is paid off, you can transfer the property inside your fund. So look, it just means that with a small balance, you can access the properties that you may not be able to access whilst you're just relying on your cash. Be mindful at the moment that interest rates inside super are probably double what they are outside. So we got quoted the other day around about 7.5% for borrowing inside an SMSF. It's possible, absolutely. It's again, arm's length. You can even lend yourself. You don't have to go to a bank to borrow. You can, if you've got the money outside of super and you don't want to take advantage of the contribution caps, you can lend the fund yourself, but it needs to be at arm's length.
Yep. So commercial rates and all that sort of stuff, and the usual.
And loan agreement. That's right.
Yep. And for me, this just continues to point to having an expert like yourself actually handle it, because the thing that always blew my mind as a young bloke studying tax law and everything at uni was that by the time I'd finished a semester of tax study, it was all obsolete because they'd changed all the bloody laws.
Yeah. We're kind of lucky in SMSF, particularly not right now. We've got a Labor government trying to knock us over, but generally the changes that come in, something like the LRBA, that's once in a decade change in terms of how we do things. Generally, it's things like contribution caps might change, pension limits and things like that. But generally, we don't see a lot. One of the important changes recently, which will be of interest to your audience in respect to looking at self-managed super and buying property, is there's non-arm's length income. ATO are looking quite heavily into, to use an example, I have a self-managed super fund and I do my accounting for my own self-managed super fund. In the past, we could have probably not charged ourselves for that service, but now the way the legislation is set up is if I don't charge myself the $3,000 to do that out of my superannuation, then all of my income could be taxed at 45% as opposed to 15% inside super. And it's relevant to, say, builders, for example, that might be looking at self-managed super fund and saying, hey, why don't we pull our super? We'll go and buy a knockdown, and we'll put something up, and we'll just charge cost. It's very, 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 very scary. There's been a few cases that have gone through where that potentially any income earned from that property forever, and not just the income, but capital gains will be taxed at 45%. So you lose half your super by doing that. So if you are looking at setting up a SMSF and look, a lot of builders do it, but you need to be charging yourself market rates.
Matt, listeners, I'm struggling to stay off my soapbox here.
Please do.
Matt, I have long been baffled by the intent behind the whole superannuation concept, and I think largely it's been a great idea. It's a great initiative in Australia, but it seems that there's this conflict between creating self-funded retirees, which is what I always thought superannuation was supposed to be about, and then all of this stuff that almost makes it too complicated, not attractive enough, and people just don't put money in there because they don't see the point. And so then we have all of these non-self-funded retirees, particularly in small business land, which make up a huge proportion of the taxpayer base in Australia. Am I just a cranky old man, or is there something going on here?
I think the benefits, until last night where they confirmed this 3 million limit, for most people, that's not going to make much difference, the 3 million cap. But
unfortunately,
the benefit of having your money inside super, as you get closer towards retirement, is that if you've got assets sitting outside of super, you're in a taxable environment. So you still the marginal tax rate applies, whereas in superannuation it's 15% on all income. And if you're in pension phase inside a self-managed super fund, then it's tax free. So essentially, you can have your assets sitting in a tax free environment. Whereas and this $3 million cap that the Labor government is proposing is essentially trying to get those assets back into a taxable environment to help with extra tax. But look, the benefits are there.
You're being very measured.
That was
I'm
diplomatic.
I'm trying to be diplomatic.
You're being apolitical. I love it.
That's right. So it's kind of the benefits are there. And again, you need to be working with a specialist to make sure you're taking advantage of it. So we see a lot of funds come across our desks where they might have 10 or so pension accounts set up in them where they only need one, and they're paying more tax than they need to. So it's really making sure that you're speaking to someone that knows what they're doing.
Yeah, because at the end of the day, it is easy for cranky old men like me to go, super's a waste of time. It's too complicated and they keep attacking it. Why would I put money into there? But the reality is, even at a 3 million cap, that's a cracking tax concessional amount of money to have when you roll around to your 60s.
That's right. Yeah.
You're avoiding a crap load of tax by using that tool. It may not be as good as it was. It may not be as good as we want it to be. But it's still a very tax effective environment to hold investments, right?
Yeah, that's right. Providing you're engaged with it. If all you're interested in is getting that quarterly statement, and you're happy to earn whatever the box that you've ticked when you've done your application, then stay with industry funds, stay with retail. But if you want to get more engaged, and it's like everything, the more effort you put in, the more you get out of it. So if you if you're looking at self-managed super, we have clients that just let it sit, and they're only in it because they can get access to investments. A lot of people are very property focused and outside of super, so why not do the same with your super? It's just another vehicle. And one of the things that I talk to clients about a lot is we go to uni, we go through high school, we go to uni, we spend so much time on our careers in generating that income, but we don't think about our super, and you could be retired longer than you're in the workforce. So it's about really thinking about, do I want to get to 67 and start again, or do I want to be making an effort now? So when I do get to 67 and my career income goes away and I'm reliant on my retirement income, do I want to start from scratch, or do I want to start with a bigger platform, a bigger base? So it's really about engagement.
Yeah.
And that's whether you're in SMSF or not. So it's really knowing how to read your member statement and things like that.
Yeah, it's Nick and I obviously banging on about tradies in business all the time. Our listeners obviously know that, and I'm still amazed that some people have been listening to this podcast for the entire time it's been running, which is almost 10 years now. I think we're in our 9th year or something. But just taking an interest is sometimes enough to improve things. If you take an interest in your business, if you take an interest in your marketing or your staff, you can make some change there. It becomes a little bit automatic as humans. We notice when things aren't going as well as we want them to be, and so then we just unconsciously do stuff. And I guess it's the same with superannuation. I'm guilty of just parking mine over the years. I left the planning industry. I was disillusioned with the whole thing, and I just shoved it in a fund and did nothing with it. And so it was just lacked interest in it, and therefore I didn't get any interest. Boom, boom. But
exactly. No, exactly. And we see it all the time. And look, that's fine. Like, there's plenty of people that, and sometimes it's a little bit of it's in the too hard basket. Superannuation is, I get it. It's boring, right? There's nothing exciting about what we do. But as I said before, if you think about your life, the life timeline, you're reliant on either being self-funded or you're reliant on the government for with life expectancies now. Anyone born now is looking at 105, 106 years old. Then you're going to be retired longer than you're working for some of us. So I think it's essential to show some interest in where that money goes from your employer.
Yeah, and to choose your hard. Either you want to rely on the government to look after you for 30 or 40 years, or you want to rely on yourself. And I think as tradies, particularly listening to this, I don't think they're big on relying on other people. They're always of the opinion if you want something done properly, you do it yourself, and here's a perfect opportunity.
That's right. And they just need to be aware that it's taking an interest does take some time as well. You can't sort of and there's no shortcuts with self-managed super, that's for sure.
I think it's a great opportunity for everyone. And I've seen a real rise in the interest in investing. For a long time, I was a kid, mum, dad had shares. I remember the conversations being really complex. It's not something I've ever delved into, yet my kids, so 2 out of my 5 have share portfolios and are investing already, and they're very young. One's not even 21, the other one's 26.
Yep.
Because it's become easy for them to start to get that interest with through, I guess, podcasts and things, teaching them about what to look for, what's safe, what's not safe, what's experimental. And of course, they're in a very experimental time in their lives. So I feel like this is another one of those vehicles, I think you said earlier, Matt, that can create that ideal outcome that they're all looking for. And it's going to be, I guess, with the learning that they're all doing now with micro investing apps and things, that's going to help contribute to what they would need to know to be able to do what is necessary. Yeah,
absolutely. I think it's about, again, it's about control. It's about that generation. Look at my kids are younger, but it's all about control of what they do. So I can see something like self-managed super being a lot more important to them than it has been to us coming through. So, and you got to remember, superannuation itself is still reasonably new in our country. There's a reason why our generation is having to talk to people about strategies to increase their super, because we didn't have it, at the start. So for them to be, we obviously my kids know what super is, because we talk about it all the time, but getting them to understand where that money goes and why they don't get it, because you start your first job and they don't quite understand why the tax office gets half of it, and then you've got to also send stuff off for retirement. So they don't have, when you're 17, you don't think about being 67, so or probably 75 by the time they get there.
That's right.
So I think it's good. It's great that and things like buying shares again. You can go to an industry fund and a retail fund, and you can get access to some of that flexibility. But because depending where you go to a retail fund, you can only get access to whatever they got on their list. You can't decide where you want to put your money.
Yep.
If they're learning how to use and invest in shares now, then they're going to want to carry that through.
Yeah.
Matt, can we wrap up with some do's and don'ts? Kind of drop this on you, which is the way we do things here at the Tradies in Business podcast. Yep. But are there some main do's and don'ts for people listening to this when it comes to self-managed super?
Yeah. Well, the first one is to educate yourself. Don't listen to what everyone says at the barbecue, because they'll either
Uncle Terry.
They'll be wrong 9 out of 10 times. And look, it's a self-managed super fund is specific to you, not to what your desired outcomes are. So I'd educate yourselves, and there's lots of, you can get it free. I'll also give myself a quick plug with my other accounting firm. Is we have a Best Practice SMSF is a chartered accounting firm that provides educational tools and resources to Australians that have an interest in self-managed super. So you can visit our website and have a look at that there. But there's plenty of free resources on the ATO's website as well to ASIC to find out more about super. Don't go in without having some idea of what your responsibilities will be.
Love it. Yeah, I'd probably go and check yours out before I read the ATO stuff.
Yeah,
but
thank
anyway.
you.
And that's not from a technical point of view, but just from
mine comes with a small fee.
Ease of reading. I don't care, mate. I'd pay you a fee just so I don't have to read the. And
look, and if you do make the decision to set up a self-managed super fund, then speak to a specialist and shop around. Make sure you get a good deal, because you pay for what you get with self-managed super, and keep that in mind. Setting up a self-managed super fund can be done online, but I wouldn't. I'd use a lawyer to do all that. Just make sure that you and things like some of the things associated with self-managed super. One thing we haven't talked about is that you can have life insurance inside a self-managed super fund. Your superannuation, if people aren't aware, doesn't form part of your will. So if you've got a will in place and you do set up a self-managed super fund, and for those that even don't, you need to consider where your super will go when you die, because if you die without what we call a death benefit deed or a binding nomination, your super is at the trustee can decide where your super goes, because it doesn't form part of your will. So little things like that, just when you're setting up these structures, make sure you use a lawyer.
Usual story. I'm sure licensed plumbers and licensed electricians and licensed builders would all be advocating to use licensed tradespeople.
That's right.
And it's exactly the same in this area, gang. So, Matt, what are your contact details as well? Again, just so our listeners grab those.
Well, you can visit us at www.lifetimesmsf.com, and if you've got an interest in finding out more about SMSF, you can visit www.bestpracticesmsf.com.au for tools and resources. But if you've made the decision to set up a self-managed super fund, Lifetime SMSF can certainly help you on the way.
Love it, Matt. Thank you so much for
thanks for having me
out with a cranky old man and a trading wife.
Business partner.
And look, I'll get my email address is matt@lifetimesmsf.com.au. lifetimesmsf.com.au. That's Matt Hatt. If anyone's got any questions, I'm happy to answer them.
Thanks, Brilliant. Matt. That's really helpful.
Send all your spam to Matt. And if you've got some money in super and you haven't looked at it for a while, or if you've got a super fund somewhere floating around, go and check it out. And you might be able to do some more stuff with it than you realise. So get in touch with Matt and the team, and take an interest in your money, gang.
You've been listening to the Tradies in Business podcast with Warwick Bidwell and Nicole Cox. Find out more about today's guest, tools for your trade business, and other cool stuff at tradiesinbusiness.com.au.